Hi guys, in this reading we will understand the methods of cash flow statement. There are two methods of cash flow statement. First is direct method, second is indirect method. The direct method is not under the purview of your syllabus, and that's why we will understand the indirect method. Cash flow statement consists of cash flow from operating activity, second cash flow from investing activity, third cash flow from financing activity. Now we will do a basic question of cash flow from operating activities. Let's start. Question: the profit of Philips Limited after appropriation was rupees 2,50,000. This profit was arrived at after taking into consideration the following items. Serial number, particulars, amount. 1. Depreciation on fixed tangible assets, machinery, rupees 20,000. Second, loss on sale of fixed tangible assets, furniture, rupees 2,000. Third, goodwill return of rupees 9,000. Fourth, provision for taxation, rupees 35,000. Fifth, transfer to Generalizer, rupees 17,500. Sixth, gain on sale of fixed tangible assets, machinery, rupees 8,000. Additional information given. Particulars on 31st March 2018 and 31st March 2019. Trade receivables, all goods 50,000 and 62,000. Trade payables 45,000 and 55,000. Inventory 12,000 and 8,000. Income received in advance in 31st March 2018 8,000. Outstanding expenses 6,000, 3,000. Prepaid expenses 5,000 under 31st March 2019. You are required to calculate cash from operating activities. Let's start the answer. Calculation of cash flow from operating activities. Particulars, amount. Net profit before tax. Net profit before tax is the starting point for calculation of cash flow from operating activities. Rupees 3,02,500. How we get this? Let's understand through a working note. Calculation of net profit before tax. Net profit after appropriation, rupees 2,50,000, which is mentioned in the question, plus provision for tax 35,000. Why we are adding provision for tax? As it does not result in outflow of cash. Next is transfer to Generalizer. So it is added. Why? Because it is an appropriation and it does not result in outflow of cash. So rupees 17,500. So total of this rupees 3,02,500 net profit before tax, plus depreciation on fixed tangible assets, rupees 20,000. Depreciation is an expense. It is shown on the debit side of the profit and loss, and it reduces profit made during the year but does not reduce cash. So it is non-cash item. That's why we are adding. Next is loss on sale of fixed tangible assets, rupees 2,000. It is added back to find out operating profit. Next is goodwill return of rupees 9,000. Return of a goodwill does not involve any cash payment. So that's why we are adding. So total of this is 31,000. If we add 31,000 in the rupees 3,02,500, then total we get rupees 3,33,500. If we deduct gain on sale of machinery, rupees 8,000, then we get rupees 3,25,500 as a net profit before working capital changes. So why we are deducting gain on sale of machinery? Because it is non-operating income. That's why we are deducting. Next heading is decrease in current assets. Under this item is inventory. In the question it is mentioned in the previous year inventory is 12,000 and in the current year inventory is 8,000. So there is decrease in the inventory. It means we must have sold goods for rupees 4,000. So there is an inflow of cash 4,000 rupees. Next is increase in current liabilities. Under this trade payables. In the previous year trade payables mention is 45,000 and in the current year trade payable is 55,000. It means there is increase in trade payables. There is no outflow of cash. Trade payables 10,000. So total of this 14,000. If we add 14,000 in 3,25,500, then we get 3,39,500. Next heading is increase in current assets. Trade receivables mentioned in the question in the previous year is 50,000 and in the current year is 62,000. So there is increase in the trade receivables from 12,000, indicates the collection from trade receivables are less. That's why we are deducting 12,000 rupees. Next item is prepaid expenses. Prepaid expenses mentioned in the previous year is nothing and in the current year is 5,000. It means there is increase in the current assets and there is outflow of cash. That's why we are deducting 5,000. Next heading is decrease in the current liabilities. Under this there is outstanding expenses. So outstanding expenses mentioned in the previous year is 6,000 and in the current year is 3,000. It means we must have paid outstanding expenses from 3,000 rupees. So remaining outstanding expenses is 3,000. Next item is income received in advance, which is mentioned in the previous year is 8,000 and there is no value in the current year. It means we are utilizing the income received in advance 8,000 rupees which we had received in the previous year. So there is outflow of cash of rupees 8,000. So total of this 28,000. If we deduct 28,000 from 3,39,500, then we get remaining cash generated from operating activities rupees 3,11,500 minus tax paid 35,000. It will be assumed that provision for taxation made during the year equals the payment of taxation during the year. So after deducting 35,000, we get net cash flow from operating activities rupees 2,76,500. Now that this is done, if you have any doubt, then please let me know in the comment section. Thank you.